Today we're going to be talking about a couple of basic models used for stop hunting. Stay tuned, traders. We'll be right back. G'day traders, I'm Stacey Burke from Stacey Burke Trading. Into the new year, we're almost at the end of January. Had a lot of tremendous feedback regarding not only the videos, but those of you who have taken up the free M&W course on fractal trading that's available on the right-hand side of the blog. Have had a lot of positive comments about that. I highly recommend getting this free course. There's no strings attached. It's an excellent breakdown of market structure, but also the repetitive cycles market makers use in terms of building and enticing and inducing retail money into the market to create false technical trends and then reverse that into the market maker trend to take the money off the table, which is primarily the number one reason why 99% of traders fail. Today we're just going to talk about a real basic stop hunting model that pretty much occurs every single day in London on most major pairs, depending on how they open up and trade, but essentially there are two basic models that are used. We've talked about in the other videos the accumulation phase, and essentially that the market will consolidate, break down, stop hunt, trend, reverse, and go back into consolidation, which effectively gives us our bar chart or candlestick, depending on what you're using. And again, the same model can occur the other way, where we might open high, stop hunt, reverse and consolidate, trend, and again, our basic bar chart. Now, in some cases, as we see on Friday, reversals, and we'll talk about that in a second. Just get my cloth. We may see a market that appears to trade like this when in all essence, it may actually do this and then do that and consolidate. And that's what we're going to talk about today. So the last few weeks, we've had a tremendous amount of movement in the British pound crosses and a lot of the euro pairs as well. Friday was a huge day for a lot of traders, and actually last week in general for a lot of the pound traders was a massive week. What I tend to do is I have my hourly charts up. We'll talk about market structure in a different video, but we're going to talk about the basic model. We'll have a consolidation phase in the US close and Asia open. We'll see stop hunt, drop, stop hunt, rise and consolidate. And in some cases, perhaps resume a trend that's already in place. And again, that can occur in the opposite direction, where we drop, stop hunt, rise, stop hunt, consolidate, and close. And the other version of that is where we may see consolidation or accumulation, rise, and then an M pattern form. Drop, hit the stops, rise, and consolidate. And in the same way, also the other way is consolidation, accumulation, drop, hit the stops, rise, the W pattern, rise, trend, hit the stops, lower peak, and accumulation. Now, in a lot of cases, what will happen to a lot of traders is that, actually, we'll show a couple of variations of this as well. The M and W, we can see the higher M formation and the lower W formation, which again can end up being rise, hit the stops, rise, hit the stops again, and then drop, and then drop, hit the stops, drop, rise, and consolidate. And same thing in the other direction, where we might drop, hit the stops, rise, drop again, hit the stops, rise, trend, drop, hit the stops, rise again and hit the stops, and then drop and consolidate. Now, it's important that if you understand that there's really only two things that they can do to you, whether it's in the other direction or this direction, or up or down, essentially they're going to drop, hit the stops, rise, hit the stops, depending on how the market accelerates and what time of day. Again, we talked about this between 2 a.m. and 5 a.m. New York. So obviously you want to be matching your other structure in terms of the levels we talked about, level 1, level 2, level 3 tends to be the midweek reversal. Like we saw on Friday, the Canadian dollar was a classic example. Reversed in Thursday's US session, and then Friday rolled over and did the reversal down to the week's low. We saw that on the euro as well. We saw the W formation on the euro yen, perfect textbook W formation. But again, around the London Open, there's only really two things that they can do to you. Stop hunt high, stop hunt low, close or trend into the US session or into the resuming the trend. And again, that can go the other way. Stop hunt down, rise, hit the stops and drop. Or again, we might get the double stop, which is essentially an M pattern, or the double stop hunt low, which is the W pattern. If you understand that basic concept, then you should be able to apply that to your charts. Now again, I said I use the hourly charts. I trade off of the 15-minute charts. So as we head into London, I'll be looking at which pairs, essentially how they've traded in Asia. I like to see a nice tight consolidation. And then I like to see one of these patterns present where we see the stop hunt either counter trend to my structure. So again, last week we saw level 1 on Monday, Tuesday with a lot of the British pound pairs. And so we saw the W formation come off of the bottom of the pound and pound yen. And of course, we had a weekly high from Thursday, Friday over here. And the market went into a level 2, which was a continuation situation. And then we saw that break through and give us a level 3 trade that went into Friday, where they trapped traders down in a false downtrend and continued that into Friday's close, which again sort of matches our original market maker template. Now we've now taken out monthly highs on a couple of those pairs, so potentially we may be looking for either an M pattern to form up here and then that same scenario to head down with level 1, level 2, level 3, or we may actually see this consolidate and give us a consolidation phase and then resume into the new month where we see a new level 1, level 2, level 3 form. But the basis of today's video is again understanding consolidation, rise, stop hunt, drop, stop hunt, and continuation or trend or accumulation, or seeing the market rise, stop hunt high, drop, stop hunt low, drop, and come back in and trend again. If you can match that with the pairs that you're trading, and then with your bigger picture in terms of the weekly structure, level 1, level 2, level 3, potentially identifying your midweek reversal point as well. And then these are where, as the market evolves over the week, if you think about the term market maker, essentially what they're doing is as the week evolves and the ranges expand, they're making bigger and bigger ranges for the market to trade. Your technical indicators will often take you in a direction opposite to where the market maker is going to take the market. And these are the types of trades that can offer you 5 and 10 to 1 or more on some of those trade setups. Now obviously there are going to be days when there's trending markets, as we saw last week, but often, as we mentioned in the other two previous videos, we'll see the W, V, V, M scenario, or perhaps the M, A, W scenario where the A's are stop hunt high, and the V's are stop hunt low, continuation. So hopefully you got some value from today's video, traders. Again, as I mentioned, get the free M&W course. It's on the right-hand side of the blog. And also, if you haven't done so, go to my homepage, get my 7-step daily routine for high-performance traders. Drill yourself every day in terms of your accelerating your learning, developing your trading skills, bulletproofing your mindset for success, doing all the things necessary, goal setting, journaling, all the things day after day after day that are going to inch you forward in a direction of constant progress and help your trading to be moving in the direction of the trader that you want to become. So stay disciplined, stay focused. We have had a massive year already in terms of some of the weekly ATRs and the ranges that have been trading. And I know moving into the end of March with Brexit, there's always going to be something new. We're going to talk about that in the next video about how they use news to complete pattern structure. And they often will drive the market in a false direction for 2 or 3 days leading into major announcements so that they can do exactly what we just showed with the reversal patterns and shift the market once they've trapped enough volume into the market completely to the other side. So stay disciplined, stay focused, keep getting better, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.